Welcome back to the Central Prairie Grain Market Update, your go-to source for grain market news and local crop insight. Kansas City wheat continues to stay in the spotlight this week as global tensions rise in the Middle East. The July 26 wheat contract is currently sitting at $6.06 per bushel, with traders watching closely. Over in corn, the December 26 contract picked up some strength Thursday, gaining 6 cents to close at $4.76. Soybeans, meanwhile, remain a big talking point across the market, especially after the U.S. Supreme Court's recent tariff decision, which has traders keeping a close eye on export demand. Over the weekend, tensions escalated significantly overseas. Iran's supreme leader was reportedly killed following a U.S.-Israeli strike on Saturday, which also eliminated several senior Iranian officials. The strike came after negotiations between the U.S. and Iran aimed at addressing Iran's nuclear program ultimately broke down. Events like this often create ripple effects across global markets, including energy and fertilizer. And that brings us to our next developing story, impacting agriculture: fertilizer supply. The conflict in the region has caused a partial pause in fertilizer bidding as production and shipping disruptions move through the Gulf region. The Middle East accounts for roughly 25% of global urea exports, and with U.S. inventories already on the tight side, the situation is putting additional strain on fertilizer markets heading into the growing season. On the crop insurance side, soybeans are seeing stronger coverage, with the spring projected price coming in at $11.09 per bushel, which is 55 cents higher than last year. Corn, however, moved the other direction, with the spring projected price slipping 8 cents to $4.62 per bushel. Now let's bring it back home. Wheat across the area is off to a strong start thanks to the warmer weather and good subsoil moisture. The early momentum is encouraging, but moving forward, we're really going to need to see some rain over the next month to keep the crop progressing the way we'd like. One thing I continue to hear from producers is fewer sorghum acres going in this year. With China largely staying out of the sorghum market, those acres appear to be shifting towards corn and soybeans, where profitability currently looks stronger. Soybeans, in particular, could see an acreage bump after the $11.09 spring insurance price was set. Now the big key will be getting the weather to cooperate. If we compare that with a wet spring and summer, the outlook could be pretty interesting. On the marketing side, prices are showing strength. 2026 July wheat sits at $6.06, 2026 December corn looks profitable at $4.76, and 2026 November soybeans are sitting at $11.37, all showing solid opportunity for profitability. Just a quick reminder, if you've got grain in storage, you can put out a target offer. That way, if the market rallies to the price you want, the grain will automatically sell at that level. If you'd like to talk through your marketing plan or strategy, give me a call or shoot me a text at 620-204-8748. That's all for today's update. If you'd like more insight like this, you can sign up for the Central Prairie Co-op podcast at cpcoop.us/podcast. Thanks for listening to the Central Prairie Grain Market Update. Until next time, stay safe out there.